Hello and welcome to InvestorWeb, your reliable source for all things investment. Here we strive to give you a comprehensive view of the investment world, from stocks and bonds to real estate and cryptocurrencies. We delve deep into various investment topics, providing you with insights and tips that can help you make informed decisions. We host discussions with industry experts, bring you latest investment news, and even provide step-by-step guides on how to invest in various sectors. So, whether you're a seasoned investor or just starting your journey, InvestorWeb has something for you. Don't forget to subscribe and hit the notification bell to stay updated with our latest content. We are on a mission to make the complex world of investment simple and accessible for everyone. Today, we will delve into the world of cryptocurrency, focusing on one of its stalwarts, Bitcoin. To start off, let's clarify what Bitcoin is. In the simplest of terms, Bitcoin is a form of digital currency, also known as cryptocurrency. It was born out of the 2008 financial crisis as a response to the perceived failures of the traditional banking system. It was envisioned by an anonymous entity known as Satoshi Nakamoto, who introduced a peer-to-peer electronic cash system that operates without a central authority. Now, to understand Bitcoin, imagine a ledger that records all transactions. This ledger is not held by any bank or government, but is distributed across a network of computers known as nodes. This network validates and records all transactions in a transparent and tamper-proof manner through a process known as mining. This is the heart of Bitcoin's decentralization. No single entity has control, making it resistant to censorship and manipulation. In terms of its use, Bitcoin can be used for a variety of purposes. You can use it to buy goods and services from merchants who accept Bitcoin, or you can hold on to it as a form of investment. It's also used as a tool for transferring value across borders quickly and with minimal fees, which is particularly useful in countries with unstable currencies. A key feature of Bitcoin is its scarcity. There will only ever be 21 million Bitcoins in existence. This is coded into its algorithm and cannot be changed. This scarcity, combined with its utility and decentralization, is what gives Bitcoin its value. But it's worth noting, Bitcoin is volatile. Its price can swing dramatically in a short space of time, which can be a double-edged sword. It can lead to massive gains, but also significant losses. Bitcoin is a revolutionary technology that is reshaping the way we understand and use money. It's a new form of digital gold in an increasingly digital world, and it's starting to play a major role in the global economy. Now that we understand what Bitcoin is, let's explore its investment potential. Bitcoin has gained significant attention as an investment asset. Let's discuss why. One of the most compelling reasons to invest in Bitcoin is the potential for high returns. Since its inception, Bitcoin has shown exponential growth, outperforming traditional assets like stocks and bonds. For instance, if you had invested a mere $100 in Bitcoin in the year 2010 today, your investment would be worth millions. However, these high returns come with high volatility. Bitcoin's price can fluctuate wildly within a day, a week, or a month, but for those who can stomach the volatility, the rewards can be substantial. Secondly, Bitcoin offers liquidity. As one of the most widely recognized and traded cryptocurrencies, Bitcoin can be bought and sold virtually anytime, anywhere. With exchanges operating round the clock, investors have the freedom to trade Bitcoin whenever they wish. Unlike traditional financial markets that operate within set hours, another advantage is the increasing acceptance of Bitcoin. More and more businesses, big and small, are beginning to accept Bitcoin as a form of payment. This expanding acceptance signifies Bitcoin's growing role in the global economy, further enhancing its appeal as an investment. Lastly, Bitcoin has potential as a hedge against inflation. Unlike traditional fiat currencies, which can be printed at will by central banks, the total supply of Bitcoin is capped at 21 million. This scarcity can protect investors against the eroding value of their cash holdings, especially in times of economic uncertainty. However, as with any investment, Bitcoin is not without its risks. Its price is highly volatile, it's susceptible to regulatory changes, and there's always the risk of loss due to hacking or mismanagement of digital wallets. While these advantages make Bitcoin seem like a lucrative investment, it's not without its drawbacks. Like all investments, Bitcoin comes with its set of risks. First and foremost, Bitcoin's notorious volatility is a significant concern. Its value can swing wildly within short periods, and while this can mean potential for high returns, it also signifies a high risk of substantial losses. One day you might be on top of the world, and the next, you're down in the dumps. This roller coaster ride isn't for the faint of heart. Next, we have the regulatory risks. As Bitcoin and other cryptocurrencies gain popularity, they also draw more attention from government regulators. In many countries, the legal status of cryptocurrencies is still in a grey area, and sudden changes in regulations can drastically affect the value of Bitcoin. For instance, if a major economy were to ban Bitcoin, it could lead to a significant drop in its value. Then there's the security risk. Bitcoin transactions are irreversible, and if your Bitcoin is stolen, it's gone for good. Hackers have been known to target digital wallets and exchanges, and there have been instances of millions worth of Bitcoin being stolen. Also, if you lose access to your digital wallet, whether it's because you forgot your password or your hard drive crashed, there's no way to recover your Bitcoin. It's like losing a gold bar in the ocean. Once it's gone, it's gone. Lastly, there are environmental concerns. Bitcoin mining uses a lot of energy, to put it mildly. In fact, if Bitcoin were a country, its energy consumption would rank in the top 30 globally. This high energy usage leads to a significant carbon footprint, which is a concern for environmentally conscious investors. Weighing these pros and cons is essential before investing in Bitcoin. Remember, every investment comes with its own set of risks and rewards, and it's up to you to decide whether the potential rewards of investing in Bitcoin outweigh the risk. So, is Bitcoin a good investment? The answer isn't as straightforward as you may think. The decision to invest in Bitcoin, or any cryptocurrency for that matter, is one that hinges largely on individual risk tolerance, investment goals, and a comprehensive understanding of the cryptocurrency market. Let's start with risk tolerance. Bitcoin, like all cryptocurrencies, is highly volatile. Its value can skyrocket one day and plummet the next. This level of volatility is not for the faint of heart and requires a healthy tolerance for risk. If you're the type of investor who can't stomach significant price swings, Bitcoin may not be the right fit for you. Now let's consider your investment goals. Are you looking for a quick return on your investment, or are you in it for the long haul? Bitcoin has proven to be a lucrative investment for some, but it's essential to remember that past performance is not indicative of future results. If you're looking for a long-term investment, you'll need to be prepared to weather the ups and downs of the market. Understanding the cryptocurrency market is a critical aspect of investing in Bitcoin. This is a relatively new and complex market that operates differently from traditional financial markets. It's crucial to educate yourself on the ins and outs of cryptocurrency, from how it works to the factors that influence its value. It's also worth considering consulting with a financial advisor, particularly one who is knowledgeable about cryptocurrency. They can provide valuable insights and advice tailored to your individual circumstances and investment goals. In conclusion, Bitcoin can indeed be a good investment for some. However, it's not a one-size-fits-all proposition. It's a decision that should be based on a thorough understanding of your own financial situation, your tolerance for risk, and your investment goals. And remember, just like any other investment, it's essential to do your homework. Investing in Bitcoin can be rewarding, but it's crucial to understand the risks involved. To sum up today's discussion on Bitcoin, we dived into the fascinating world of this digital currency, exploring its origins and how it works. We discussed the potential rewards of investing in Bitcoin, including its potential for high returns and its status as a decentralized currency. However, we also touched on the risks involved, such as its volatility and the regulatory uncertainties surrounding it. It's clear that Bitcoin, like any investment, comes with its own set of challenges and opportunities. The key is understanding these aspects and making informed decisions based on your personal financial goals and risk tolerance. We encourage you to continue learning, researching, and staying up to date with the latest developments in the Bitcoin world. We'd love to hear your thoughts on Bitcoin investment. Do you think it's a good investment? What are your experiences? Leave your comments below. That's it for today's video. Don't forget to subscribe to InvestorWeb for more investment insights. Stay tuned and happy investing.